Welcome to AM Best Audio.
Following years of consistent and substantial growth, the flow of business from admitted insurance carriers into the U.S. excess and surplus lines market has shown signs of tapering off. That according to a new AM Best report. AM Best Associate Director David Blades is here to take us through that report. So David, how did E&S do through the first three quarters of 2025?
Well, John, in terms of growth, like you said, the premium growth moderated through the first three quarters. The market grew by 9.7%, which paled in comparison to the 13.5% growth that we saw year over year across the same period in 2024. A lot of that had to do with the fact that there are a number of lines of coverage and risk classes where we've seen moderating premiums and moderating rates that affected overall market premium and have affected surplus lines market premium. But that 9.7% growth through the third quarter was actually more than the 5.5% growth that we saw across the overall property casualty industry. So again, surplus lines market still leading the overall property casualty market from that perspective. For the surplus lines companies, we did see growth across the leading states, the bigger states, the Californias and Texas and Florida, but they also experienced some of the smaller states, again, depending on what risk classes were in those states and what lines of business drove that, saw some of those smaller states generating premium growth. And overall, the multi-year growth that the surplus lines companies have seen, I think that's really part and parcel to surplus lines companies being able to develop the customized coverage solutions that are needed for the classes and for lines of business where admitted market companies are pulling back.
Were there certain areas where E&S writers were able to capitalize on?
Yeah, definitely. I think if you look at it from a line of business perspective, I think commercial property, commercial auto, cyber, those are some of the lines that drove the surplus lines growth through the first three quarters. Also, professional liability risks, directors and officers liability, we saw that also contribute from a growth standpoint. So from those lines of business, I think were the drivers. I think surplus lines, general non-professional liability lines still are the driver and have been created the most premium year over year for surplus lines insurers. And I think the growing complexities that we're seeing in some of the newer technologies, even the evolving technologies like artificial intelligence, machine learning, even some of the more complex manufacturing risks, those complexities I think are what makes the general liability line really important from a surplus lines perspective, again, because admitted carriers, some of the risks that are associated with those types of accounts, admitted carriers might have a little less comfort with those. And so that's where you need the surplus lines companies, to come to the marketplace with that. And even on a personal line side, although personal lines is still a relatively small percentage of the surplus lines market, because of the greater volatility that we've seen in certain areas of the country in terms of secondary perils like wildfires and severe convective storms, we've seen more of some of those risks in the areas where they're subjected to some of that volatility flowing into the surplus lines market. So I think those are some of the things that have impacted where surplus lines companies have been able to take advantage.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
So when it comes to the top writers in E&S, are they able to maintain their market share of premium?
I think for the most part, we've seen that they definitely have. I think through the third quarter, 9 of the top 10 surplus lines companies or groups were able to grow their premiums through that time period. But we did see that for at least 6 of them, that growth was single digit and it was lower than the growth that they'd experienced in 2024. So again, in line with the moderation of premium increases that we're seeing. And so the moderating year-over-year growth in the surplus lines market. But in terms of the leading carriers, 9 of the 10 stayed the same from third quarter 2024 to third quarter 2025. So we still see those leading, well-established surplus lines companies driving the marketplace. One of the things that we did see in terms of the companies that were generating double-digit growth, a number of them were some of the newer, and I don't want to say new, but newer over the last 5-10 years, fronting companies or hybrid fronting companies that have been really focused on growing their market share. So we did see some of those companies kind of pushing the growth and growing double digits still, as a lot of them are still at the early part of their market strategy and still looking for growth. One of the things from an AM Best standpoint that we'll look at when we have full year 2025 data to look at is how those companies are doing from an accident year profitability perspective, to see how, while they've been growing, how effective have they been at adequately pricing their risks. So those are some of the things we'll be looking at.
Thanks, David.
You're welcome, John.
That was Associate Director David Blades. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.